all play on time basically. Now time is utilized by traders in multiple ways. One is genuinely required by higher time frame traders to absorb supply or demand, whatever is the case. If more and more supply keeps coming here, they will require more time. There will be multiple inventory adjustment breaks before we start to see a nice sustained up move or a breakout. Second way smart traders use time is to push out weak hands. So how do they do that? We only know one way of pushing out weak hands, and that is like in this manner, or say in this manner, where there is a sharp fall, a sharp inventory adjustment break, and it takes out the stop losses and pushes the weak hands out of the market. There is one more way where the weak hands can be pushed out, and that is by just staying at an important reference and doing nothing. So you can see we have been doing this for a long time now. So if I draw, let us go to higher time frame chart. So here, what they are doing is basically they are staying at this 38,000 reference and doing nothing. So what happens, even here also you can see the market was just moving sideways, doing nothing. So in this case, let's say someone has bought in anticipation of a breakout happening going down the line, and the market simply is not giving up ground. It is just staying at this 30,000 level, neither moving up, neither going down, just moving sideways. They get bored, they get frustrated. They may have bought options, they have bought an option for 100 rupees. Now as the expiry approaches, this starts going down, it comes to 75, it comes to 50. Suddenly there is some activity, it again goes to 75, again comes back to 50. Now this kind of movement that is happening in their option prices, or maybe they have bought stock or futures, whatever, that frustrates them, and then they start to throw their positions. Now this second type of selling is not happening in lots. Like when the stop hunt happens, there are hundreds of orders clustered around that level. But this second type of selling out of frustration, it happens in dribbles. There is no big crowd that is selling out of frustration. They get bored at different times, they get frustrated at different times, and they start throwing their position. But the smart man is always there to absorb. So this is another way time is used to frustrate the traders, to frustrate shorter term traders, to give up on their good positions and to enter bad positions maybe. So all that is going on. So this is never such a straightforward affair. Time is a very, very beautiful thing if you understand it. So that might be happening here. So you found a inventory adjustment break. Now again there was a failed auction a couple of days later, and now you are expecting the markets to go up, but it's not going up. So you have to ask a question: is it there is some serious structural problems in the market, or logical problems in the market in terms of market development, or it's just using time against you?